Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning market webcast. Okay, so Jobs is out. We headed down to 70, 25 to 70, 75 a couple of times, back up to 83, 84. So it's kind of jammed in this. It's jammed in a range. It's jammed inside the reaction range, 84 to 70. If anybody has the ability to break down out of that range, you're looking at a move to weekly pivot. If they have an ability to break out of the range, you're looking at 25.20. I would not be the least bit surprised if we stayed jammed inside this range all day to the, frustrating, basically everybody that wants to break out or wants to break down. You can see we've kind of spent the week just kind of vacillating, up here a little bit, up here. No breakouts, no breakdowns, just kind of fading back, into the middle as we get, from one year into the next. And it's just that kind of a trade. So we made the most of it yesterday. We did 51 handles yesterday in the room. But, in the volatility, this is a market that has punished you for any mistake that you make. You make a mistake, this thing punishes you. And it doesn't punish you for a -1. It punishes you for like a -5. So we did 51 handles yesterday, and there were, 17 handles of red trades wrapped in there. So look, I'm never going to BS you, okay? That's why when I sit around and tell you, we did X number of thousand of handles this year, it's because every time I have a bad day, like I did on Wednesday, I'm up front with you guys, I had a bad day. I got it back overnight, ended up +2, which was great. You live to trade another day. And if you're going to trade, this is the kind of stuff that, it just comes with the territory. This has not been a smooth tape to trade. It's been a real pain in the backside. And sometimes tapes are going to do that stuff. But, as we sit here for the week, we're up going on 60 handles, and I'll take it. So, our goal for a week is 20, and this is a hell of a lot more than 20, and it's a good way to start the year. And I hate trading the beginning of the year. On the daily chart, we're fighting over this 9-day. We traded on either side of it the last 3 sessions. You can see what's happened here. Big move down. That low is held up. 25.20, 25.20. You've got the daily mid-band starting to come down in an attempt to meet price. It's going to really start to fall rapidly as it sheds these prior prices and we really get into the stuff that lives, say, below 26.50 down to 23, 16 rather. So we have a date with the daily mid-band next week, either as a function of time or as a function of price. And the outcome of that meeting is going to, for me, that's more important than wherever the weekly pivot ends up next week. And, getting back to this hourly chart, I talked to you guys last year about how, with the good end of the week that the bulls had, they kind of flipped the field on the bears. Meaning we had gone through the last several weeks with the weekly pivot comfortably above. And the bear's job for the course of the week was to keep weekly pivot as resistance. And if I zoom out here enough, you can kind of see. You got weekly pivot up here, price is below. Weekly pivot up here, price is below. Weekly pivot, price below. Weekly pivot, price below. Now, what the bulls were able to do late last week was finally get back on top of weekly pivot and get away from this lower price. That was going to allow weekly pivot to open below price, flipping the field. So now all the bulls had to do this week was come in and hold weekly pivot as support, which they did here, and they certainly did here. That's why this week has been, from a price standpoint, a little bit different. What do the bears need to do? Well, they need to do what the bulls did. They need to flip the field. How do you flip the field? You tank it. I don't know if they can do it or not. Not based upon anything that I've seen over the course of the last 3 days, but you never know. And until the bears can execute that kind of price action, the weekly pivot is going to continue to stay underneath or pretty darn close to where we open next week, which gives the bulls a lot easier task in what is a bear market. So this thing is due for, a little bit of a sustainable rally. And you can call this a sustainable rally. It's not the prettiest rally ever, but if you can establish something down here, like, weekly pivot, as a higher low versus 23.16, and break out over the top of 25.20, then you can start to, do another leg higher. Now, lest we forget, we are still going on 300 handles below the 200-day moving averages. So we're still in a bear market. Just some things to think about as we head into the weekend. All right, everybody have a good one. Watch 70 on the down, watch 84 on the up. You got 25.20 above that, 42 below that. Same story, different day. Everybody take care. Have a fantastic weekend. Check us out on social. Come check out the room. It's a great time to start. Got a bunch of new people. You can learn right along with them. And you can have a fantastic year trading this thing with a lot of really, good, professional, serious people. All right. Take care. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.